Well, hello there, my friends. Chris Marchese here with you for Arcadia Economics. Welcome on into tonight's show. It's going to be an exciting one because, as you see, I have three great guests joining me to dig into the silver market. But tonight, we'll cover silver and the order flow that's happening because obviously that's part of the First Majestic short situation that we talked about. The same group of us about, it was actually 2 weeks ago tonight. Was wild to see things escalate a week later. And with that said, let me welcome on in my panel. And actually each one of you, since we have a lot of new folks watching in the past week or so, Rob, can you say hello and give a quick, tell people about your background so they know where you're coming from and some of your credentials?
Sure. So I run goldsilverpros.com, and previously for about 13 years, I was an auditor, audited a lot of different companies, worked in the Big Four, also did internal audit as well.
All righty. Well, thank you, Rob. Great to have you here. And Chris Marchese, welcome on in from SilverSeek and a bunch of other great shiny things. How are you doing? And can you tell folks about your background a little bit?
Yeah, sure. So I started out working at, investment banks, Morgan Stanley, hedge fund, didn't really like that. So learned from David Morgan, the silver guru, and, started a royalty and streaming company, and then now working for SilverSeek with Peter Spina.
Well, thank you, Chris. And I might point out, because part of the conversation tonight is going to include some banking issues. I was an equity option trader, so a little bit of a different side. But Chris, you did mention you have experience at Morgan Stanley. So I want to point that out because I think that's going to come in handy as someone who has been on Wall Street and seen some of the schemes that happen and can comment on things that happen this week. And of course, my dear friend and weekly guest, the great Dave Kranzler, calling in. How are you tonight, sir? It's great to see you.
Doing well. I need Steph Curry to hit one more three, or I'm going to lose a bet.
Well, you got steaks on the grill. If Dave has to hop off, like in the middle of a question, he's got steaks cooking, basketball bets going, and tracking the First Majestic Silver market. It's quite a portfolio there, sir. And real quick before we start, I would just like to make a special announcement because this Sunday night, after the Super Bowl, we are going to be hosting Silver Bowl 1 here on Arcadia. Actually, we're basically going to invite all of the guests that have been on the show. So if you've been a guest and you've been on the show and you'd like to participate, send me an email and I'll be reaching out to people, but that will be sometime after the Super Bowl. Silver market will be open and maybe more of a party than expertise, but we'll have a bunch of people coming on here Sunday night. So hit that subscribe button and the notification bell so that way you can be a part of Silver Bowl 1, which I'm excited about. And folks, now how about we dig in? We're going to get an update momentarily on the bullion market from Andy Schechtman. He's not here just yet. So Dave, perhaps you could start us off. I'll pull up the First Majestic chart. A lot has happened in the last 2 weeks. And why don't you walk through any thoughts that you've had as we saw a rather volatile period of time since our last call?
I kind of thought that the Reddit chat board, Wall Street Bets, whoever the guys are that are involved, I kind of thought that trying to implement a short squeeze on the silver mining stocks it probably wasn't going to work as well as it did with something like GameStop, because the short interest, I think when we chatted last week, I think the short interest in First Majestic was about 28%. And as of January 30th, because the New York Stock Exchange releases the short interest numbers on the 15th and the 30th, I think the short interest had come down to about 24 or 23%. So, and who knows where it is right now? We're 4 trading days or 3 trading days, whatever, into the next month. So I didn't think the short squeeze was going to work. My thing is we don't need people engineering short squeezes in this sector in order to make money in it, because the entire sector is fundamentally cheap on its own merits, as opposed to something like GameStop or AMC Theaters or whatever, fill in the blank, whatever of these stocks that have gone ballistic the last couple weeks. They're fundamentally essentially bankrupt companies. And I think just on the fundamentals alone, the precious metal sector, and particularly silver, stocks like First Majestic, as an example, are just fundamentally extraordinarily undervalued right now. And so, you got to take a long-term perspective when you're investing in this sector, especially with the inordinate amount of official manipulation that goes on. So, I'm waiting for stocks like First Majestic and Mag Silver to come back down in price. I actually bought some Mag Silver calls today because, it went up straight up and then came right back down. And now I think it's cheap. So, fortunately, it looks like the short squeeze attempt got cleansed very quickly in this sector. And now we're back down to a level where the sentiment's negative, according to certain indicators that I look at. And I think we're setting up for a big move higher.
Well, yeah, it seems that, like you said, the fundamentals are there. I think that's the question, where the fundamentals have been there for a long time. What finally sparks it? Although with that said, fortunately, Andy Schechtman of Miles Franklin has just logged on. So we will go live to the physical silver market update, because really when we see the First Majestic chart here was how it spiked up Monday. I think I remember seeing it as high as $24 or $25 at one point. And then sure enough, we had the silver price drop out of the sky to 10% Tuesday, which was interesting. And
I think it hit 30 overnight, right? Silver hit 30 overnight on Monday.
Yeah, it did.
yeah, well, we
30.01.
have that chart here. This is the Kitco. How about I'll pull up for my friend Dave Kranzler. I know he corrects me, thankfully, and says to use this one is better because we get the futures here. So the futures were over 30. I remember I might have been up 2 a.m. in the morning Sunday when it hit 30.14 and watching the share prices of First Majestic and European trading. But yeah,
that's
then
the March silver future, by the way.
Well, thank you, Dave. In either case, you see that despite, now we got these headlines of, if I can move, got the headline here, which we'll get back to whether that could have had an impact, because as I think Andy Schechtman can fill us in on, while some of the banks were saying that the silver squeeze was over and everything was normal.
Can I just say how ironic it is that JP Morgan says that silver's overvalued now?
We'll have plenty of time.
Isn't that fitting?
You will have plenty of time to comment on that one, my friend. Although Andy Schechtman of Miles Franklin, are you on the line and are you still awake, sir?
What's going on, fellas? How you all doing?
Doing
How's it going,
wonderful.
Hey, Andy.
And
Hi,
great
guys.
to have you here. And I appreciate you making some
Likewise.
time. I know well, actually, I won't say what's been going on. Why don't you give us your impression as a bullion dealer at Miles Franklin, what the order flow has been like, and let folks know.
It's truthfully unlike anything we've ever seen ever in 30 years of business. I thought I'd seen it all in March, working, literally 24 hours a day. That was child's play compared to what we're seeing right now. In a span of 1 week, I got personally north of 3,000 emails. I am working day and night to return people's phone calls. We're having to send people emails saying we're trying the best we can to get back to you. Our phone is ringing off the hook. Our website got shut down because there was too much traffic on it. It pretty much blew up. And it's truthfully, I'm not sensationalizing anything. It's like toilet paper and bottled water in February of last year. And that's what it's like unlike anything I can even explain. Please believe me when I tell you this. It's truthfully shocking.
And Andy, you've owned Miles Franklin for 30 years. Maybe we hit year 31 now. So
31.
You saw 2011 at your age. I think you caught 1982. So how do you compare what you saw this week to anything else in the history of your ownership of the company?
2011 was nothing at all. I mean, 2011, we were getting 200 phone calls a day. And that at the time was, fantastic. We're getting literally hundreds and hundreds and hundreds of phone calls a day. I personally am getting north of 500 emails a day, every single day for the last couple of weeks. And the people that I talk to are actually understanding of the fact, because I'm getting comments, something to the extent like, one lady told me today that she called a competitor of mine, waited on hold for hours and hours and hours, and when she finally got through, she was disconnected. When you look at the online retailers, they're all sold out of everything. The demand is incredible. And through all of this, over the last several days, as silver's come down, I will tell you with 100% certainty, there has not been one person that I have talked to that has sold a thing. Not one. Everyone is buying, and no one cares about the high premiums at all. And it's truly unlike anything I could even try to explain to you guys. And I'm trying my best to do it and sound completely and totally sincere, because I get up at 6:30 in the morning. I'm bombarded with phone calls until I could do it till I go to sleep. The emails keep coming nonstop, and it's a blessing as a business owner. But I will tell you that there is a massive disconnection. The disconnection between price and demand in this industry, the falling price and wicked demand, is every bit as startling to me as the stock market's performance is in relation to the economy, maybe even more. It's just completely counterintuitive, 100%.
Well, Andy, I appreciate the update, and I know you mentioned how people react to it. I'm going to pull that article back up here because we have some U.S. Mint said on Tuesday, gold bullion coins rose 258% in 2020. Well, silver demand was up 28%. They're talking about last year, but here's their statement. U.S. Mint is limiting distribution of its gold, silver, and platinum coins to specific dealers because of heavy demand. What is the situation with the Mint? We saw JM Bullion on CNBC on Monday. I don't think that was the list of things people thought would happen. So what are you hearing with the Mint?
So we are one of only 27 U.S. Mint authorized resellers. And in speaking to our representatives, we have been given zero guidance as to when the next allocation for gold coins will come about. And so, and silver for that matter. So typically we get a weekly allocation, and we get heads up into the week when we will get what we will get and when we'll get it. And now we are getting zero indication as to what we'll get or when we'll get it. The allocations that have come out have been sparse at best. And so, you're dealing with the epitome of the model of inefficiency. They have more demand than they can keep up with. It's probably the only branch of the government that makes money. And they are completely keeping us in the dark as to what we're going to get or when we're going to get. I called the largest distributor of gold in North America, where we have a very large line of credit, and asked him, I said, listen, what's the deal with 2021 Gold Eagles and Buffaloes? And he said, carte blanche, he's out of all Gold Eagles 2021, no Gold Buffaloes. He has some backdated Gold Eagles, and they as well. This is one of the large primary distributors for the U.S. Mint, and they have been given as well zero indication as to when the next allocation will come out. And this is really, really unusual. And I would like to say, and I've been mentioning this as well, for all the people out there who are upset about the high premiums, please understand this. You have a public that is not selling a drop. No one is selling anything. And so a lot of that has to do with, getting information from you guys, Dave and Rob and Chris, getting this kind of real information. People understand what's happening. So the public sells nothing, but the demand is truthfully like the craziest thing you've ever seen, ever. I was in Florida for 2 weeks. Honest to God, I never left the house. For 14 days, I was in the house. My kids and everyone were out on the beach having fun. I never left the house. I couldn't. Never saw the sun in 14 days because of what's happening. And so you have the primary distributors who are getting no product from the mints. They're getting no product secondary market from the public and massive demand. So they jack up the premiums. People out there who have waited to the 12th hour and are bitching about the high premiums, do understand this. If you want to call me and sell your product, I'll pay you wicked prices above spot right now, way above spot, and so it goes both ways. But do understand that the primary distributors who receive the allocations from the mint aren't getting any allocations, and what they get is sparse at best. So they're being forced to raise premiums. It goes both ways. It's just the thing is that no one ever sells into this environment. They only sell when the price is collapsing and there are better things to do. Right now, there is no product to be found in the secondary market, and good luck trying to find much in the way of platinum. Good luck in trying to find much in the way of new gold eagles, gold buffaloes. Right now, for the next one more day, for sure, I can sell silver eagles at around $9.5 over the price of silver. And that will put me, and that's probably close to the highest I've ever sold them for in 30 years. But the funny thing is, go look at JM, go look at SD, go look at APMEX. They'll all be 10, 11, 12, 13 over. I'll be cheaper than anyone in the country at $9.5, which is very startling to me, but should be to your listeners also, because it's just not loosening up, and it's been this way now for the better part of 2 weeks.
Andy, I appreciate that. Sorry, I had the mute button on there. Dave, you have a comment?
I have a question for Andy. So, Andy,
Hey, Dave.
It seems to me that we have a supply and demand problem that can be solved with price. And my contention is, so the mint has put everyone on allocation.
Mm-hmm.
Why doesn't the mint just take orders at a much higher price, lock in those orders at that price? Because it seems to me if the mint was willing to pay a higher price for silver blanks, then they'd be able to produce enough silver eagles to meet demand. Am I wrong?
No, you're not wrong, but they don't even tell us that it's an issue of not being able to secure the blanks. They did tell us that last year, and at one point anyway, and the Treasury Secretary went and met with the mint and actually raised the price in the open market to buy them. I think it may have something to do with what they're allowed to do legally. Now, I'm not positive about that, but the primary distributors are the ones who jack up the price. They use the excuse that it's COVID related, social distancing related, and they're not being completely straight and telling us it has an issue to do with lack of product. They're more or less insinuating it has to do with the inability to keep up with the crazy demand. So, I mean, I don't know. I don't know of a business where when you have that kind of demand, I look at myself, where you're just not trying your darndest to keep up with it. But, I guess it's a branch of the government. I probably don't have to say much more than that, simply to say it's very inefficient. The U.S. Mint has truly been the model of inefficiency since 2008. And so, one of the reasons, if you go back and looked at the things that was talking about long before I knew Chris, in speeches I would give at Sprott at the conference, I would say the market will define itself by an inability to source product. I've been saying that again lately. And the reason I've always felt that is back in the day, 2014, 15, 16, 13, even way back before that, 2009, 10, the mint was running out of product on a repetitive basis. And what's really startling this time, you guys, is that the mint ran out of gold eagles and buffaloes week 2, January. Typically, we don't see product running out until November, December, when they stop the previous year and start making the next year allocation. This year, week 2, everything was put on allocation. And so that's very, very, very startling to me anyway. So I don't know if it's a money thing. I don't know if it's a blank thing. They claim it is a inefficiency, or rather an inability to keep up with demand based upon COVID restrictions, social distancing, et cetera.
Dave, did you have a follow-up question there?
I did. That's really interesting about the gold coins running out, before silver, because usually it seems, at least in the 20 years I've been doing this, that silver runs out more quickly than gold. However, and I want to preface this by saying I've made the argument for a long time that the retail coin buying market doesn't drive the market price of silver. It's typically your big buyers, and might be nation buyers like India and China. But we have seen indications that there's a shortage of physical gold in London. The COMEX we know is a Ponzi scheme, but in London, we've seen record BIS swap level activity since July. In fact, it just hit a new. The data, the BIS reports are lagged by, I believe, a month or 2 months. I think it was December is the latest report. Again, the swap activity hit a new record, and that's an indication that there's a shortage of bullion bars in London. So, I'm wondering, Andy, if you think that, what we're seeing in the market right now is just a general shortage of physical silver and gold bullion.
Well, look, you reach a point when you push down the price where people just gobble everything up, like we saw in 2008. The price went from 21 to 9 in silver, from 1,000 to 700 in gold, and when that happened, everything was dried up across the globe.
Yeah.
And I guess I would completely agree with you about the physical market really not driving the price. I mean, if it were a freely traded market, perhaps it would have far more impact. But the counterintuitive price smashes have, if anything, exacerbated demand in this industry. When they smashed the price, and Chris and Rob did an amazing job last night of showing the volume and the price crashes on COMEX. When that happens, people have really, at least the people who have been paying attention for a long time, have really used that as an incentive or a subsidy to increase their holdings. And so, I mean, look, this isn't just related to the U.S. Mint. This is the Canadian Mint as well. And I guess I would say it really underscores and validates what you're saying, Dave, in that the demand globally for physical gold and silver in the retail sector is off the charts, completely and totally off the charts. Restocking empty coffers is getting ridiculously hard. When you see a company like JM Bullion, that when you look at their website and it's out of stock across the board on 98% of what they have, let me put it to you this way. I know the people they buy everything from. I do. I know them very well. When I look at their website, typically there's 200 things that I could buy. Right now, when I look at their portal, there's about 6 things that I can buy. So, the demand is extraordinary. And I just think that the mints either can't keep up, haven't prepared well enough, and I guess, it lends to your mind wandering and wondering if they're trying to ration what they're giving to the public, if there's a bigger agenda. I don't know. I do know this, that the U.S. Mint is supposed to produce as many gold and silver eagles by law as are demanded by the public, and they are doing a woefully poor job of doing that. When, if I were to try to place a $10 million order on gold eagles right now, there's not a chance in hell I could do it. And this means, I'm a primary, or one of the 27 resellers, and know all the primary distributors. None of them could do it. Maybe in back dates if they took some time to find it, but not on the 2021s. And that is really unusual to see that at the very beginning of February. To see it in November, maybe, but not in February when the allocations are fresh and out the door. It's really hard to wrap your mind around it, Dave. But when you look at all the things that are allowed to happen, like price smashes, like Rob was talking about, creating shares out of thin air on SLV, even if the metal's not there. All of the things that they are allowed to do is just lends itself to the physical market not having as big of an impact until things somehow get right. And that's really what it all boils down to, is that the big money has been able to control the market by changing the rules and rigging the game. It doesn't mean people shouldn't continue to accumulate it, because that's what the big money is doing. And so I think you just have to not get as affected by the price smashes and realize that in the end, the most sophisticated players on the planet are accumulating metal at subsidized prices. So you do what they're doing. Don't listen to the bullshit that JP Morgan says silver is on its way down now, it's overvalued, the run is over. They've been doing counterintuitive talk and rhetoric forever. That's their playbook number one. They smash the price and issue bad rhetoric in the media, and then they do the opposite. So, you know, Goldman Sachs a few years ago told everyone the price was crashing, and then they ended up buying 200-300 metric tons for their own coffers. So it's not do what they say, it's do what they are doing. And you can see very succinctly that big money is accumulating gold, whether it be the central banks, the commercial banks, or the others reportable category, the family offices and the sovereign wealth funds. That's what you do, not listen to what they're saying, because they're misdirecting everybody.
Andy, I know Chris has a question for you, but would you find it interesting if in an article titled "Miners Decline as JP Morgan Downgrades Sector," which at least, whether intentional or not, gives a certain message, published at 4:59 a.m. Eastern Time, Tuesday morning, after silver has rallied on what you described as panic buying. Yet in this article where JP Morgan decides to downgrade them, I just scrolled through, there's nothing about, they say European mining sector has been a standout, nothing about the order flow that you described. I mean, nothing about the inflows to SLV that, and Rob can talk about that with his auditor background. I've talked with several people that I bring on the show. I've not found anyone yet who believes that amount of metal they're adding is possible. Yet if JP Morgan downgrades, is there any chance there's a connection between, well, not the Silver Bowl, but that you had, so that's sometime around here, JP Morgan, so people are panic buying silver, they see nothing, and then sure enough, you see this volume hammered like we've seen for decades. And Andy, I'll ask you or anybody else on the panel, is that a pump and dump?
Well, I mean, look, first of all, I saw the article that you're talking about, and you and Rob did a great job of showing how the headline said one thing and the body of the article said nothing. But this again, look, how is it that the sector could be downgraded when the fundamentals for silver have never been more bullish, from the Green New Deal all the way up to the Belt Road and Rail Initiative in Asia, connecting 65% of human population. I mean, the need for silver is extraordinary in an environment where 1/2 of 1 billion ounces of silver have been in deficit over the last 2 years between demand and mining supply, over 300 million ounces last year. You tell me how that could be anything but amazingly bullish. At the same time, JP Morgan has amassed 1 billion ounces of physical silver by misdirecting. And when we talk about pump and dump, yeah, I mean, look, they are the custodian of two of the biggest silver ETF funds on the planet. They own more silver in their account, over 1 billion ounces, than has ever been accumulated by one entity ever, 10 times what the Hunt brothers tried to accumulate. And so, you know, to let all that come in, to suck all that in, and then to drop the price. They're also the company that, one of the big ones that are selling all the options, let them expire worthless. JP Morgan, without question, is, whether it's a pump and dump or not, this has been their exact, right out of their playbook forever. Everything they do is a pump and dump, or disingenuous, or doing the opposite, telling people that metal should be sold, and yet they continue to accumulate it. This is right out of their playbook. And that's what I mean by You just can't do what they're saying. When they say that the sector is over, you should be going in hard. Look at the inflows into SLV. Look at the inflows into the retail sector. Look at every major retailer in the United States has sold out a product. It's the opposite of what they're saying. And I've talked about this, and you and I have talked about it at length, Chris, the book, The Art of War, misdirection. They are misdirecting the public through rhetoric and price. They don't care what the price is, and they're able to put out rhetoric that makes people hear one thing and then immediately react. Most people don't spend as much time as we all do digging into the under the hood, reading the numbers and researching. And you put out an article like that has a headline that says JP Morgan downgrades miners, but talks nothing about the fundamentals of it or anything about the headline. People read the headline and that's all the time they have. And that creates the narrative. This is the point. This is why I talk about misdirection so pervasively. If you've been following this long enough, you understand that, like, for example, when we start throwing bombs at Iraq, you would think the price should go to the moon when they start the second Gulf War. No, it doesn't. It gets smashed. And counterintuitive is playbook number one. And use these counterintuitive smashes to accumulate more. And I really do mean that, because it is very frustrating, but it has been the central narrative of what I've talked about for over a decade. If you watch it really closely, you will know that when the price should rise, they'll hammer it. And when the stock market rises and everything is good, they'll let it climb. They are trying to de-link the rationale that all of us have and all of us talk about moving into precious metals and out of fiat. And it works. It works for most of the people. Most of the people will never get past just that narrative. So that's why, I'm so honored and happy to be part of what you guys are doing, because you're shining a light on it. It's frustrating. It's hard for people to deal with. But sometimes in life, you just got to have strong fingertips and hang on, because you're all right. Everything you've been saying is right. And, Mother Nature will have its way in the end. And you'll see the prices reflect what they should be, because right now they are distorted completely and totally in every single way, as is the demand and as is the rhetoric that they're pouring out to the public, keeping everyone in the wrong place, doing the wrong thing, except for the people that listen to you guys.
Well, appreciate that, Andy. I know Chris has a question for you, but I'd like to point out for anyone who's seeing the headline saying, when are we going to talk about First Majestic? We're getting back to that, but the reason I thought this was all relevant and wanted to bring Andy on is because the same time silver price started collapsing, here's First Majestic that had, in terms of whether there can be a short squeeze on First Majestic, which we talked about 2 weeks ago, clearly the answer is yes. Now, we saw what happened when there was a short squeeze on some of the other stocks. Robinhood changed rules. People were closed out of positions, told they couldn't buy. A lot of things that, now I lived through the housing bubble in an option pit in 2007, so I've seen a few things, but I've never seen anything like what we saw in the last week. And the whole silver, everything we talked about, the silver price, it's not an accident. This fell, and we'll come back to that because, when you have moves like what we saw in GameSpot, that's when shops get blown out. I know a lot of people have heard about that. So I just wanted to point out we are going to bring this back to First Majestic, but you can't get there without this foundation. And that's what the media doesn't connect when TD Ameritrade is talking about Google searches and Twitter trends, yet we look at what people actually do with their money. So with that said, Chris, did you still have a question for Andy?
No, actually, Andy answered it. I was just curious because the U.S. Mint, it's a government agency. They are obviously inefficient. And I just wanted to know if this year was different and that they can't source blanks, different from other years, or what was the issue? But he answered.
Yeah, supposedly they're claiming, really, as far as I can tell, that it's not an issue of supply. Now, I don't know if that's true or not. More along the issues of the inability to keep up with demand. But here again, if you have a business and demand is increasing, you do the best you can to keep up. You don't put your primary distributors on allocation 2 weeks into the new year. So
they have no profit margin, so I guess it doesn't matter to them.
Right. Well, it just fits part and parcel with all of the other things that are happening. Like they don't want to shine a light upon the fragility of the dollar and the system, and people rushing to buy gold and silver only will do that. So yeah, but it's also the Canadian Mint as well. They're doing the exact same thing. Over the last year and a half, the Perth Mint in Australia, say what you want about them, but to me, they have been the best performing mint of all of the major mints in the world. And they have kept up with supply. And if it weren't for them, I would have had far less to sell over the last 15, 16 months. So they're one of the few who seems to be pumping stuff out and getting it out to the public. But the mints here in North America are doing a woeful job of keeping up with demand. Gold maple leafs, which should be readily available, are almost impossible to get right now, 2021s. So it's, here we are, February, first week of February, and this is happening. In 31 years, I have never seen this happen, nor have I ever seen the kind of demand that, I guess in their defense, I've never seen this kind of demand, but, for what it's worth, it just seems, something just doesn't seem right.
Well, Andy, I sure appreciate that. Go get some rest. So hopefully you can join us tomorrow and we can take some questions in a live Q&A.
100%. 100%. I'll be there.
And Miles Franklin. And then you got to take Saturday off because we have Silver Bowl 1 coming up after the Super Bowl on Sunday. So you're going to be in top shape for that. Thank you, sir. Go get some rest. Don't call back too many people tonight, and we'll talk to you soon. Thanks for joining us.
I just want to say one last thing, and I'll let you go.
Yes,
I know Keith Newmeyer. He's a great guy, the CEO of First Majestic. He's an amazing guy. And he's one of the only mining executives that is not a geologist. He's a businessman. And he also has the courage to stand up and say things publicly about the manipulation in the market. And maybe that's why his stock is targeted. I don't know. But I think everybody out there should buy First Majestic Silver. It's one of the core positions of my portfolio. I know Keith personally. He's an amazing stand-up straight dude. So for what it's worth, he's got my vote as a good person first and foremost, and a great business executive and a first-class property and stock. So I will hop out and listen to what you guys have to say about First Majestic. Thanks for inviting me in, and I hope you guys all stay well and have a great evening.
Have a good evening, Andy.
Thank you,
take care,
Andy.
guys. Yep, you bet.
Not Andy.
Bye-bye. Bye, guys.
All right. And with that said, I thought that was an important foundation to dig back in, because when we come back and look at the chart, again, here is, well, let's get the 5-day, but you see the price of First Majestic responded to the silver price. So Chris, why don't you start? And I don't know if you have experience with short squeeze situations, but any thoughts on what we saw First Majestic, what you expect to happen, and why don't you take it from there?
Okay, so on the end of last week, I put in some sell orders, some stink sell orders at 19, open Monday at 23.65 or something like that. At that point, it was expensive. I mean, it was very expensive, maybe not on a cash flow basis or future cash flow basis, but on a relative basis to a lot of the other mining stocks. So I think it was squeezed a little bit, or I don't know if it was the anticipation of getting squeezed that drove buyers into the market. And then it has since come down. I mean, it's still higher than it started out, I think, when we talked last. So, I mean, that's my take on it. I haven't seen the new short numbers, so, I'll have to see if that got reduced a bit.
Yeah, and Chris, do you have any thoughts on what we talked about here? Because to me, it's hard to separate the First Majestic price from what we discussed in JP Morgan's reports. I know, that's why I mentioned in the beginning, you have banking experience. You've seen on the inside, the stuff that goes on and people pull. Do you see any possible scenario as an expert witness in which this chart is legal, non-criminal trading?
No,
Is there any scenario you can construct to support that?
no, it's not legal. I mean, this is also, I have to include, like, I've studied the price action of the AM, PM fix and gold over the first 12 years of last decade. I mean, this price action is not a coincidence. It's all orchestrated. I mean, we're in a rigged system, obviously. I mean, we all know that. And all you can do is hope to win out long term.
Dave, I'll ask the same question to you. Former junk bond trader covering gold and silver. You cover mining stocks, which gives the full spectrum of different personality types out there. Is there any way that you could, as an expert witness, go in front of a court and give any way say that that is legal free market trading?
No, I've been watching this and involved with this sector for 20 years. And if you look at just today, for instance, I mean, this is what, February 1st through 2nd, but just if you look at today, more than 50% of the price ambush occurred right as the COMEX floor was opening. And it's been that's a repetitive pattern for the last 20 years. And I mean, it just underscores the fact that they're using the paper derivatives market to try and rig the price of gold and silver.
Well, I certainly agree. And Rob, same question to you.
Yeah, I've been documenting, it seems like forever, but especially the last 7 months, how the price smash downs work. I think I went over it again last night, Chris, after we had our call. You simply look at the volume. I mean, they put 300,011 contracts. Last night I talked about gold. Gold got smashed down to the 1791 mark. And I think there were, I forget how many there's like 200,000 contracts on gold, or 190,000 contracts at gold at 1791. So really what the futures market allows you to do is set a target on your futures positions, and it's very precise. They can precisely aim at a specific point. You can see it in the settlement data. You can aim at a specific point in gold and silver. By the way, you can do it with the other commodities as well. It's just not the precious metals. You can do this with all of them. You set a target. If you throw enough paper at it, you literally, it's like throwing a dart and hitting a bullseye. You can hit the exact target that you want. It's not haphazard where they'll throw a few contracts at it on the futures market trying to suppress it. They literally can say, okay, we're going to throw 100,000 contracts out. And you see that on this chart. You see them throw a bunch of contracts on it. The price comes down. It trades sideways for a bit on your chart here. And then they're like, okay, that wasn't enough. Let's throw more. And you see those volume numbers, those blue bars, they're tossing more contracts at it until they get the price that they want. And that's exactly how it works. It's
when the margin requirements were hiked,
So things were even more sensitive, and certainly JP Morgan knows that. And Rob, can you, again, I mentioned you have a background as a professional auditor.
Yeah.
Can this pass an audit?
Well, I mean, they don't audit it, and the problem is I don't think it's.
No, I'm saying, would you give this a passing grade? Is there any way you would give this situation and you would say to investors, there's somehow this is normal or legal?
I mean, if you take position limits and the rules of the exchange into account, no, I don't see how there is, because there's such volume. When you look at the volume numbers, every contract in silver is 5,000 ounces. You throw 311,000 contracts at 1.6 billion ounces. Most of that done by the bullion banks. Not all of it. Some are the producers hedging their price, where it's legitimate hedges. But the majority of that short is bullion banks. You see it on the commitment of traders report over and over and over and over and over again. They went from 37-something% short silver to 47.9% of shorts. The bullion banks. They're throwing so much paper at it. I want to know how that doesn't violate position limits. The other thing that Chris hinted at there a second ago was they raise margin, meaning margin is like you're buying on a contract. You don't, like an option play, you don't have to pay for the full value of it. It's a leverage type of deal, but you have to put some money on margin. So when you're in the futures market and they raise the margin requirements, that knocks out some of the smaller guys. It plays into the hands of the bigger guys. So who are the biggest 4 and 8 traders short silver on the market? It's the bullion banks. So when they raise the margin, it allows the bullion, because the bullion banks have almost unlimited funds. They're multi-billion-dollar, even trillion-dollar entities.
Yeah.
So you know, a $2,000 raise in a margin contract's not going to affect them, but it's going to affect everybody else. It clears the way. It gets rid of the small guys and lets the bullion banks concentrate even more. And it's like you know, you talk in military about a force multiplier in combat. If you have a bow and arrow versus having a machine gun is your force multiplier. It makes every soldier more effective. Well, that's what raising the margin does on contracts on the COMEX.
Well, I appreciate that, Rob. And quick look at the silver chart. I meant to throw this out in the beginning.
Can I just add one thing there?
Sure.
I mean, it's not just a function of all the paper that they're throwing at it. It's the amount of paper in relation to the amount of underlying physical that's available for delivery. And the reason why you don't see this, you know, you reference some of the other commodities products. The reason why you don't see this in the other commodities products for the most part is because the underlying, they're depletable commodities, and the guys who go long the contracts, they actually take delivery and they take the product away from the CME, like cattle, grains, you know, agricultural products, even oil, that type of thing. But with gold and silver, the people who actually stand for delivery, for the most part, they don't remove their bars from the COMEX. And and you know, the COMEX actually incentivizes people who stand for delivery. They incentivize you to keep your bars in the COMEX because their storage fees are lower than using a non-COMEX vault. So if you wanted to take delivery of, say, you know, 5 1,000-ounce silver bars, it's cheaper to leave it in the COMEX than it is to remove the bars, because there's a fee to remove the bars, and then there's the cost of transportation to remove the bars and move it to a non-COMEX vault. So, you know, where they would no longer be able to get away with this scheme is if people who stand for delivery, you know, big investors, whatever type of entity, if they would actually take delivery of the bars and load out the bars, move them off the COMEX, out of COMEX vaults and into independent custodial vaults, or, you know, safekeep it yourself, for God's sakes. You know, 5 1,000-ounce gold bars doesn't take up that much space. So that's really where the difference is between gold and silver and all the other commodity products.
Yeah, and I wanted to.
Sorry.
Go ahead, Chris.
I was going to say the exchange can force you to settle in cash beyond X amount of contracts.
There are force majeure clauses in the contract, but you know, it would take something drastic, I think, for them to implement that.
Or, well, I mean, they don't really need to abide by the rules. They can get around them. I mean, they're all kind of this part of the same cohort. You know, it's part of the banks. I mean, part of the government. It's all one rigged system. I mean,
and to add to Dave's points and Chris's points, if you look at deliveries is something I have had my eagle eye on since July 14th, when I said silver's about to pop, and a couple of days later it did, and it started to run all the way almost up to 30. I think it was like, what was it, 11 or 14, ran up to 29 something.
Yeah.
And then I've been watching every single day the deliveries, and something interesting the last 3 to 4 weeks, especially the turn of 2021. As soon as the clock flipped on the new year, the deliveries have been down in both gold and silver, but silver specifically. And so people are not standing for delivery at the same rates. And not only that, they're doing EFPs in both gold and silver. But silver the other day, it was like 2 days ago, there were 13,000 contracts on the EFPs, and that's where you go get it from London. You're not getting it off the COMEX. You're taking a future on the US market, you're going to get your physical in the UK market.
Or they're settled in cash.
Or settled in cash, yeah, exposure. So, what fiscal is coming out, it's not coming out of the COMEX vaults. So my question is this, is it that they don't actually have all the liquid fiscal they say they have? And the reason I bring that up, and Ronan Manley on Bullion Star originally reported this, on April 19th, the CME Group released a letter stating that the depositories weren't sure how much of their eligible that section of inventory was liquid. Because eligible, like Dave was saying before, you could take it off the COMEX, but you choose not to because it's cheaper. Well, a lot of people don't realize is most of what's on the COMEX is not up for futures. It's ineligible, which is private storage. It just happens to be in that branded vault. And so most of it's not liquid. And so it's not at these price levels, silver's not being made liquid for futures contracts. I think that's part of it. The second part of it, I think, Chris, and you can confirm this, I think it was Andrew McGuire who said COMEX is discouraging deliveries. He heard that. They're discouraging deliveries. And so I think there's a lot going on to keep the metal on the market. And maybe that metal comes off the market at $35, $40, but it's not coming off at $26, $27. They're having to go to London to get it. So that's a shortage. Even though there's silver there, people aren't letting it go. So, and as Dave was saying earlier, that's all solved with price when he's talking about the US Mint. I think that's true on the COMEX. I think that gets solved with price. So we have a liquidity issue in physical silver right now. Until that price substantially rises, I think we're going to continue to have that.
Yeah, I agree with that.
I mean, I would think someone would want to take delivery off the exchange just because the premiums of everything else are so high. Get it much cheaper. Make your own blank or your own rounds for much cheaper than you buy it for. If you could take delivery of commercial bars.
Yeah, well, some good points there. And again, let me get our First Majestic chart back up because, and again, I know we talked more about the silver market specifically than First Majestic, but I don't know what other conclusion you can draw. Looked like First Majestic certainly was getting squeezed. If we pull back a little further, you can see here it was just humming along at $14, 13, 14 bucks, then shoots up to 25, comes back down at the same exact time that, and actually, Dave, a question, or maybe for you or Chris. Now, I was in equity options, but if you think about this on an intraday basis, so First Majestic shoots up here. These are the kind of moves that I remember shops got blown out on the floor when you had stuff like this happen. We've been hearing a lot about Melvin Capital. And you see, it's interesting. It got pushed down a lot by the end of the day. Does it matter where it closes at all in terms of margin requirements, or was there an additional incentive that this, if it had not come down that day, I mean, that could have been more trouble? Any thoughts on that?
I mean, yeah, the margin call happens after the market closes, so it's based on the closing price. I mean, you might, in the middle of the day, you might be in danger of a margin call, but if the price rallies, you're not going to get a margin call at the end of the day.
All right. Chris, did you have anything on that one, or?
No, I mean, what Dave said.
All righty. And we have a few minutes left. I have one thing to add, and then one other topic I'll get your opinions on before we wrap up. As I was thinking about this, I mean, like right here was kind of priced like a takeover stock. That premium was built in, then it comes down. But all right, see, still $2 higher than it was a week ago or 7 or 8 days ago. But I was trying to think, well, all right, what do you do here? Because, I mean, at the end of the day, nothing underlying, the same reasons that we talked about a potential short squeeze 2 weeks ago, they're all still in play, except now you have panic buying in the physical market. So the one thing that is the biggest factor that can pressure the market. So to me, all right, I don't know, could First Majestic spike up tomorrow? It seems pretty possible. Does that mean it will happen? Of course, that's not the same to say that. But I was thinking back in my days trading options, and actually it reminded me of a day I remember very clearly because this was February of 2007. It was my first full year trading my own book. and one of the stocks I had was Countrywide. This was so, this was I think it was a Tuesday, early February, because I remember that was the
Hope you
first
had
time
puts.
I'd heard. Well, I did have some puts on because again, I'm in my first couple months. You know, if I make or lose like $2,000, I'm like, oh, this is slow down. And I think that was the first time I heard the term subprime, because I remember I just happened to have these puts on and downside puts, and they spiked up a lot. And at least I remember going to see my boss. I'm like, hey, I made a lot of money today, but what the heck do I do? Sure enough, I come in tomorrow and the vol had come back in, similar to what we saw with First Majestic, where you have the spike, then it comes back in. Now, I always wish I'd been listening to Dave Kranzler, reading Austrian economics way back then. And I used to think, man, I'd only known back then, yet here we are a decade later, same thing repeating for people watching this decades from now, perhaps. I'm sure as soon as this blows up, there'll be another central bank somewhere printing, yet you have that same thing where there's a spike because there's clearly an issue. And we just described why the thing came down, because the price got hammered, and there's more pressure on the price than ever. So, hey, maybe it'll stay down for a couple of months, but it's like you swept more dirt under the rug. It didn't go anywhere. And that's what it reminded me of was trading Countrywide, where you get a warning, and people forget about it. That's how these markets trade. If it doesn't happen today, they forget. They don't care about silver, but I would suggest nothing has changed. Well, actually, a lot has changed, except it's all in favor of silver. Rob, before we wrap up, I'll let you take this one first. We don't have today's number yet, but here are the alleged inflows to the silver and ETF, silver and the other trusts. I fell out of my couch when I saw 34 million ounces on Friday, which matches what was available to the trust last year. So you ate the whole supply in the first day of silver squeeze. Monday, you got about 20. And then, Rob, you came over when we saw the 61 on Tuesday. I've talked to several of the guests that you guys see on the show. I've yet to find someone who sees how it is possible that the metal's going in here. I had a thought today that is a guess, but I'm wondering, because there wasn't any advance warning here. It wasn't like you could have planned, and some guy did the math. It'd be like 51,000 ounce bars per minute. You're registering this. Andrew McGuire's talked before, some of these amounts that go in, like when you actually look, can 10 or 20 people do this? It's hard to see. And I was wondering, maybe if, let's say you have people saying they want to buy shares and they add new shares, and I don't know, I'm asking you guys here, do they add the shares and then they do go out and get the metal, but they're working that order? Because it's hard for me to see how this metal is already in there now. 35, 20.
It's not.
This is,
Yeah, no
this
way.
is over 100 million ounces in 3 days while there's panic buying. So any thoughts on that, Rob? Why don't you take that one first?
Yeah. So I mean, obviously, if you're going to kind of use common sense and be reasonable, if somebody's buying that many shares, obviously you can't get physical in. I mean, there's transportation, time, you got to source it in the market. You probably have, I mean, if you're smart about it, you have some open lines with some manufacturers or other partners, like in the futures market, where you could get a rapid amount of metal, where that's sort of a deal, where if they have stocks, and that's not unlike retail, like what Andy has said before. He can go to distributors and he can get it because they're going to have a pile of it, and he can get it fairly quickly. So I would assume that SLV has the same thing, right? So yeah, not same day, but within a reasonable amount of time. And I'm sure there's even some sort of contract or something around when they get it. Here's the problem. What we heard Andy say, and what you see in the retail market, is there's no liquidity right now at these prices, because, as Andy said, nobody's selling at this price. What I said earlier about the futures market is, at this price, nobody's selling. People have to go to London. And what they're getting is, whatever London's able to do. But the thing about London is it's privately negotiated. And I would bet my house on the fact that any silver you're getting out of London is not at spot price. That's a privately negotiated contract. I bet it's above spot for some premium. Nobody at these prices, there's no liquidity in the market. We've talked about this entire time. So my question is, at the prices people are buying those shares, are they going to be able to source physical? I don't think so. I think they're going to have to run a deficit. To actually get that 100 million ounces of physical, they're going to have to pay $30 an ounce or something like that. And they're going to lose money. I mean, where you see this separation of price between physical and the futures market, how do what reserve does SLV have to pay that premium? Because to get that much that quick, they're going to have to pay a premium.
And a question I have for anyone who wants to field this, if that is indeed the case, I don't know. I'm trying to figure out explanations. I know and I think there could be a lot of metal leasing going on in here too, but we'll leave that aside. If they're still currently working this order, wouldn't that imply that to fill these 110 million ounces, now they're competing with Andy and all the other bullion dealers for the same pile of metal that's already tight? Dave?
Yes, there's only about 900 million ounces produced last year. That's 1/9 of all last year's production. So they have to go get 1/9 of all last year's production in a market in which people aren't selling at this price.
Dave?
You're making an assumption that the custodian or the trustee of SLV is making a bona fide effort to try and put the correct amount of physical into JP Morgan's vault. Well, if you read through the prospectus of SLV or GLD really closely, they don't really have to make a bona fide effort. In fact, I don't know if it's I can't remember if it's a general ledger entry or if it's in the footnotes, but they can just record a gold, like with GLD or SLV, gold or silver deposit, and that can be a receivable account. So, I went through the GLD prospectus with a fine-tooth comb in 2009, and James Turk did the same thing when the S1 was filed in 2004. And there's really no way to know for sure whether or not the GLD and the SLV vault actually have, titled interest to the silver bars that are in the HSBC in the case of GLD or the SLV in the case of JP Morgan's custodial vaults for these trusts. And, I've never thought that GLD or SLV was anything more than a fractional bullion scheme. And, I think it was Rob referenced Ronan Manley earlier. I mean, Ronan Manley, he did some great research and discovered that the GLD trust was leasing bars from the Bank of England. Now, the problem that SLV has with that is the central banks don't own silver anymore. So it wouldn't be able to lease the bars from the Bank of England. Now, I don't know, maybe JP Morgan really does have all the silver that Ted Butler says they have. And maybe they're leasing silver bars from JP Morgan, and they don't have to move the bars. It's all in the same vault. So I would say that if a real bona fide independent audit was done tomorrow of the SLV trust, I would speculate that maybe at most 75% of the shares that have been issued are covered with physical silver. And I think that might be optimistic.
Yeah, I would say probably less. When I talked to Nick Beresheff, CEO of BMG Group, Precious Metals Fund up in Canada, not only did he read the prospectus, but he read the authorized participant documentation back when I think it was on Edgar. This is years ago. They're not available anymore for both GLD and SLV. And he says, given the cost structure and given the way that those were written, he believes most of the metal in the two funds are leased. They're not titled. And he and I spent several episodes on my channel going through the audits, and there's multiple issues with the audits, and I'll summarize and say this as a former auditor. there's no way that, well, there's two big issues. One, the custodians don't have right of audit over who's storing the metal, the depositories. And secondly, the depositories have no way of knowing who has first claim on that bar of gold or silver. It could be rehypothecated, and they don't audit where it's coming from. They just take it. They take it in and assume, that it's their bar. But if it's leased, it's not their bar.
Chris, any thoughts?
So, I mean, like I was talking with you guys, I perused the prospectus of the SLV last week. It's just so full of holes. There's no way in hell they have. I mean, I'd be surprised if they had 25% of the silver to cover all the claims.
I was just being optimistic.
Yeah. I mean, and I'm sure if they need it, and I think you need 50,000 shares, what it is, to get your silver, they can borrow it. I think it's part of this system. And, it's like in the prospectus, it also says it doesn't have to be investment grade silver. It doesn't matter the quality. So, I mean, it doesn't specify really anything. It basically says we don't have to have, crap. You can just invest in it. I mean, it's not that much. It's a joke. And, I feel I hate that people invest in this thinking it's some sort of proxy for silver. I mean, if you're going to do it in your brokerage account, go to PSLV.
Chris, I've been looking, is there an audit at all? Or is this, I got a link from someone today that I've not been able to go through yet. I've been looking on their site. Is there even an audit provided? You commented on the quality.
I don't think they have, I mean, I'm not 100% on this, but I don't think they never have to do a proper audit. And I don't know.
Bonafide independent audit.
No, they don't.
Yeah, independent.
And the custodians don't have the right to audit who's holding the metal, the depositories, first thing. And it's the same thing with the CME group. I mean, their whole auditing structure on the futures is screwed up too. But all the audits are never published. So the audit, I'm a former auditor. When you publish an audit, you give an opinion as to whether the statements of management are legitimate or not. In other words, you found discrepancies, and either the statements materially reflect what management has said, or they don't. And without that audit report, even if you audit it, if you don't know the outcome of the audit, it's pointless. So when you have private audits that are not supervised by the custodian, it means nothing. Even if they say they have an audit, it means literally nothing.
Yeah, and even if they did, the prospectus is so vague on what they have to have or don't have to have. I don't think an independent audit would come to any sort of conclusion that looked unfavorably upon the holdings.
Well, for one thing, I mean, to the extent that GLD and SLV are using sub-custodians, the sub-custodians don't even have to let auditors in.
Mm-hmm.
So a question here, a couple possibilities. I mean, I pray, I hope that they're putting the metal in there, because it's, I had a couple people get angry with me on feedback or emails where I'm saying things, be careful about SLV. Hey, I don't own it. I'm going to be fine, but I'm just saying they're not even that's by before I said anything on the air. I talked with Rob about this nonstop, several other people. So it wasn't just, hey, maybe I'm missing something, but here's Rob with an auditing background. Chris and Dave with a banking background have seen this stuff. And so maybe there's a possibility that the metal isn't in there, or given that no one seems to see how it's possible that that it could have been put in there, if they're working that order, that means that this demand is competing against the other demand while where Andy described the shortage. And I guess that ties back to what you mentioned before with the COMEX. I don't know. Is that like become inevitable at some point, or when? Because if these guys don't have the metal, or they're looking for it, I mean, where I don't understand where it's going to keep coming from. Does anybody
It's a
have any
Ponzi
thought on
scheme.
that? Huh?
Ponzi scheme. You'll find out. This is. I mean, I think it's all part of the same system. If the COMEX needs to deliver silver, they'll get it from SLV. I mean, that's how cynical I am at this point. So, I mean, that's just.
Well, I share your concerns. Again, I don't have any agenda other than I trying to share good information. So for anybody watching, as we wrap up here, tying this back to First Majestic, I know we didn't talk as much directly about First Majestic, but I'd say the simple way I put it, you have the same type of situation, and Dave, you wrote about the subprime bubble in advance before it imploded. I sat here for the last 10 years thinking, all right, let's see what's going on in silver. This sounds like Bernie Madoff or Enron. What would be the signs right before something goes? Obviously, I don't have a crystal ball, so I don't know if this, hey, maybe it settles down for a while, but it's like we saw on Monday when the price goes up, people bought a lot of metal. Then we saw on Tuesday when the price goes down, people bought twice as much metal in SLV. And you heard what Andy said. So I'm wondering, which direction does silver have to go for people to slow down? And you're day 4 now. He says it hasn't slowed down. We're going to do a roundtable tonight, get a couple different bullion dealers. Rob, I appreciate you mentioning Nick Barishev. His assistant actually reached out today. And I think Saturday at some time, I don't know when, we're going to dig into SLV with Nick and perhaps a few other folks. Of course, Sunday is Silver Bowl 1, which will be fun. But in conclusion on First Majestic, my guess is that there's going to be a break point in silver. I'm not saying this as any sort of licensed financial advice. It feels like something is breaking now to me. This reminds me of when I was sitting in the trading pit in 2007, June, July. There was stuff happening long before Lehman. Again, we'll see what the timeline plays out, but that's what it feels like to me. And gee, it sure looked like this was close to getting out of control. And I mean, I'm not happy to see the price of silver get towards 10%, but in a way, I think the positive, while the whole world was watching, unlike ever before, it sure looks like a pump and dump was committed here. I invited Jamie Dimon or Representative JP Morgan. I don't have any interest in saying something behind someone's back that I won't speak up. I try to live a positive life. I don't go out and look for ways to cause trouble, but I mean, that's why I brought on 3 qualified experts tonight. Talked to even more than 3 qualified experts before saying it. I'm concerned. And that is, but at the end of the day, whenever those forces are resolved, I think we've seen this shows that there's a lot of short fuel on it. We talked about it 2 weeks ago. Maybe it didn't get out of control, but now we've seen the precedent. And I'll bet there are a lot of shops that are looking at this and wondering, it was weird that after all that, see, I'll bet a lot of Wall Street doesn't know what Andy just mentioned. I'll bet they're not looking at this. They're reading this. They're reading that Twitter tags are falling. The China smart money funds are tilted long. The key data, Dave, I'm sure you woke up and you heard people were buying silver, but then you saw discretionary money managers and CTAs, along with the China smart money funds, are tilted long. You said, wow, I better bow out of this one. So that's my guess, that this is, we have not seen the last of this. I think there's a vulnerability. I find from my experience, when that becomes known in the marketplace, that's when things get out of control. And keep in mind, even JP Morgan had that London whale a couple of years ago. So JP Morgan is not bigger than the market. And with that said, any final thoughts before we wrap up for tonight? Rob, why don't we start with you?
Yeah, I was going to do a little bit longer piece on First Majestic. I don't think we'll have time, so I'll do a video on that later on. But real quickly, if you look at technical analysis, First Majestic, it did a little cut pattern. So that's an accumulation pattern. So people are accumulating, waiting for First Majestic. There are two main drivers of this stock. One, they're about to have their second quarter of profits since silver went above 17, 18 bucks. That's going to be bullish for them. And on this chart, you see that the price really did spike. It hit a resistance point, a 10-year resistance point, based upon buying this week and the silver squeeze movement. And it lasted only a little while, but if we get any move up in silver, this stock is going to go nuts. And the technical analysis on that is pretty clear.
Chris?
Just keep on stacking. If you want to beat these guys, you got to don't do it through SLV, by physical, by mining stocks. I mean, eventually these guys will get squeezed in First Majestic. Maybe they have to some degree. We don't know yet. Yeah, so just keep on stacking.
Would be safe to say the final chapter on this one has not been written.
Has not.
And Mr. Kranzler.
I mean, I don't have a lot to add. I mean, if you're looking at technicals, you know, First Majestic trades at a valuation premium to the sector. I mean, there's a reason for it because of its enormous upside leverage to the price of silver. And I don't have the charts in front of me right now, but I was looking at them earlier. I mean, First Majestic still, you know, well above, you know, the key moving averages, which I define as the 21 and 50 and 200-day moving averages. But some of these other silver stocks, you know, Mag Silver, for example, I mean, that thing's kind of pulled back down. I think it's like, you know, pulled back down to its 200-day moving average. They're all still in an uptrend. And, you know, at some point, this tension between the supply and demand for silver is going to, the only way it's going to be resolved is by price. And I believe it's going to be a big upward movement in price. And these stocks are going to go ballistic. We don't need the Reddit Wall Street bets crowd to try and engineer a short squeeze for us, because that's a low quality short-term type of move. You know, if you're looking at more of like a 3 to 5 year time frame, I mean, these stocks are going to be a lot higher 3 to 5 years from now, because the price of gold and silver is going to be a lot higher.
Well, it's going to be a lot of fun to watch, and I sure feel what a blessing that I get to cover this with such brilliant minds. And I know I've gotten a ton of messages this week of all the different people, and I'd like to thank all the people who've come on last minute notice in the past week as this developed to share their own perspective. So it's not just me saying it, but you hear people from around the globe, all sorts of different perspectives. And I sure appreciate that. Although real quick, before we wrap up, Dave, would you know that there is one way that you actually can get silver below spot?
There is?
There is. Because we believe in important things like getting silver out there in the world, not being complete hoarders. And I'm darn grateful to have these sponsors that bring us this show. So with that note, everybody in the chat room who's brought a good vibe, I have 3 of these shiny silver Britannias right here that Yara, perhaps you could pick 3 winners. And folks, in case you don't find her before the end here, you can get the address at Arcadia at Miles Franklin. So Yara, I'm tossing in 3 silver Britannias for our great audience out there to get silver out in the world, spread the message. For anybody who's been confused by what happened this week, we're going to keep covering this. We'll bring on everyone outside of Santa Claus to explain it. But when there are crimes being committed in the market and people are cheating and doing things inappropriate, well, Silver Chris has your back. Last note before we wrap up here, tomorrow night, Q&A with bullion dealers. Sometime Saturday, we'll dig into SLV with Nick Barishev, possibly a few others. And of course, everybody wants to hit the subscribe button and the notification bell. for Silver Bowl 1 Sunday night after the Silver Bowl. Dave, I think you're going to score a touchdown or two in the Silver Bowl 1. Dave, any prop bets before that kicks off? Maybe on the silver price? We're going to have a move Sunday night?
I don't know. Right now, I've got all my prop bets focused on the football game.
Well, what if I rounded up a couple $1 million? I bought one Super Bowl commercial and I made it for silver. And I just mixed in like a couple quotes of Ben Bernanke and Jerome Powell talking about, not understanding gold or any of that other, those useless doorstop or useless relics that they have to rig the markets to suppress. But anyway, folks, I hope you all had a wonderful week out there. There are good things happening. I feel more encouraged than ever. I don't know when the end date will be, but I think there's good things happening. So fellas, thanks for being here, and I will see you all again soon.
Hi, Chris.
Thanks, Chris. See you
See you
guys
guys.
later.